To Charts and Coffee. Great to see everybody. I kind of at the last minute decided we'd do a Charts and Coffee. So here we are. We really must be trading addicts. Yeah, I love it. Well, I woke up, haven't even had my first cup of coffee, and I thought I'd love to take a look at some of the trades and some of the scanning that I did in the premium video and share a little bit of it here with you all. Of course, if you have any questions, feel free to ask. If you are members of the Simpler Central Room or the Sector Secrets Mastery, then you can check out that premium video in the premium video section or the top tier Outlook premium newsletter section. And a little bit of where we are in terms of, yeah, I love that. You have no idea, says TH. So a little bit of in terms of where we are. I mean, it's a bank holiday, right? So there's nothing to do, and I do plan on spending the rest of the day with my baby sister who's in town and so forth. But I've always thought that if I can at least keep a pulse of the market, even if for just 10 or 20 minutes, just take a look at what I did. This includes the weekends. And just make sure that when we hit the ground running on Thursday with OpX, options expiration on Friday, I'm not feeling a little bit of what's the word they say, ring rust, that I'm not kind of feeling disconnected and playing catch up on Thursday morning. So, that's the way I think about it. But I will probably limit my homework today to the 20 minutes or so that we're here together. And then maybe another 20 minutes looking at the open positions that we have in the mastery and making sure the risk alignment is where it needs to be as we go into OpX, any new open interest zones that might have fattened up during Tuesday's session, making sure I'm aware of those max pain tractor beams, things of that nature. But that's all things we can deal with when I see you all on Thursday tomorrow. But a couple of things I wanted to point out. And if you have any questions, feel free to type them on in. One of the trades that we were looking for, just to give you all a little bit of insight into the mastery, is one of the trades we were looking for is to capitalize on some of the strength in crude oil. And you can see crude oil is moving, right? I mean, you can see there's a candle here. It's moving a little bit. And so what we remember is not everything is closed. Like, for example, back in my Forex trading days, that was the only two holidays that Forex takes off is Christmas Day and New Year's Day. And the rest of the time, that market is open. So Forex is open right now. You can see some limited participation in futures. But one of the things I wanted to take advantage of is this bounce in crude, most especially as potential shorts in crude oil stocks. Crude oil stocks are not quite ready for even a break of the downtrend the way crude seems to have been able to do. So I'm still pretty darn bearish in things like XLE and OIH, and we're setting up a short, well, I should say long puts, right? Or if you want to short the stock, but we're setting up long puts in Schlumberger. So there are a number of things that are absolutely on the radar for us based on sometimes strength where we short the rip. And, a lot of folks say, Rog, you love your long puts or long calls and long puts, but your long calls a lot. What about the put side? What about the downside? Well, when the S&P and the NASDAQ are flirting with all-time highs regularly, there's not a lot of room for long-term bearishness, maybe day trading, but certainly not swing. However, the exception for me very much is energy, specifically XLE. Hi, puppy. Specifically the pups in the house today. It's a holiday day. Hey, pup. So when we're looking at NASDAQ hitting all-time highs, S&P hitting all-time highs, tech and semiconductors, communications, even consumer discretionary is slowly starting to gain some traction. I'm not a big fan of this sector yet. I'm not a big fan of looking for follow through in things like Amazon and Tesla yet. but it's starting to organize. We put it on the back burner, but we keep an eye on it, right? So those are things that are on the radar. And again, I'm long calls so much. I thought I'd at least mention, hey, there are some places that I am bearish, and energy and oil services would definitely be two of those sectors. All right. So questions that have come up, and trying to short gold futures. Any analysis you can share? All right. So first of all, one of the things that we do in the mastery is when we're thinking about any symbol, we think about it in four ways, one of four ways. And each one of those ways, think of it as a style or strategy, has a time frame, a single time frame dedicated to it. So for example, and I'm going to show you all four of them right now. So for example, if someone said, Rog, I'm really interested in putting GLD in a longer term hold type portfolio. Okay, that would open up the weekly chart. Someone said, Rog, I'm looking for a longer term swing, overnight exposure, days to weeks. That would be the daily. All right, what if I'm looking for something overnight exposure, but maybe just this week, maybe 1 to 3 days, right? As a starting point for the life cycle of the trade. That would be the 1 hour chart. And if we were day trading, that would be the 5. So every single one of these time frames in my layout here has a job. Their job is not to agree with each other. So I don't use multiple time frame confirmation. Nothing wrong with it. For me, just don't find it really helps me get to where I want to go, which is really two magic words that we're all looking for: account growth. My account growth has come when I focus on one time frame for the one job. So if I'm looking at shorting gold futures, again, not really knowing, Dugan, what time frame, but that's kind of my thought of when we're talking about symbols, what time frame are we looking at? Because a time frame dictates the time horizon and really in many ways the strategy that we might be looking at. So there's no short for me on the weekly, right? Green candles, overall uptrend. There's no short for me on the weekly. So let's say we're looking at the day trading. I'm going to presume no one's really day trading today, but if I were day trading, I would wait for an overbought zone up in the red section of this chart, which is the hourly price movement range. So that's not really part of the question, right? So that brings me to two swing trading time frames: my short-term swing, my 1 hour, and my longer-term swing, my daily. And if I have green candles on the 1 hour, no shorts allowed, right? So I'm not really I'm scanning this according to the question, by the way, gang. So I'm looking specifically at, is there anything that could be valid for a short? And the only time frame that would be valid for a short is the daily. The daily would be valid for a short if we get to resistance. So there's two zones of resistance, or I should say one level and another zone. One is the Darvis level sitting at about 2358.5, and the other is the daily price movement range, which updates every single session because its job is to look at what could happen on a Wednesday, what could happen on a Thursday, what could happen on a Friday, and plot that price movement range from resistance, which is that gold zone, to support, which is the gray. So the only thing that I could do is the short side. If we're talking specifically short, I'm not actually really a big time bear here, but I'm not a bull either. So we could say if it goes to the gold, that's where we want to short. If it goes down to the gray, and you'll see there's another Darvis there around 2304.8, I could buy in the gray or I could buy at the Darvis. So I could look at this from two perspectives, but the short side would be the resistance plotted by the automated Darvis or by the gold zone of the daily price movement range. So Dugan, that's the way I would look at that. And that's how I take those four time frames and break them down to, well, what is each one telling me? And if I have a particular preference for long or short, which one am I allowed to be a short seller on? All right. Next up is Patrick asks, can I look at copper? Sure. And Freeport McMoran NEM. So yeah, let's start with copper. And we already took a look at gold, so keep that in mind because that'll apply to NEM. So if I'm taking a look at copper, copper has had a difficult beginning of January. And what I mean by that is, take a look at copper's uptrend here. Look at that, from the beginning of March all the way to about the end of May. And then we had this in June. So the uptrend in copper was broken. I can't be a buyer in copper yet. However, I can certainly acknowledge that there's some support, whether that be around 4.46 or 4.43. There's some support there. But even though it's bearish, I can at least acknowledge where, if we're going to transition to neutral, yeah, where could that begin? Where could the bid, where could that demand start to kick in? All right, so with that being said, copper is a little heavy. Red candles tell me it's a little heavy. If I move on then to Freeport-McMoRan, there we go. Moving on to Freeport-McMoRan, it's heavy as well. So in terms of what I'm allowed to do, at least for now, there's always the choice of being flat. There's always the choice of being short with the daily, which would be a red candle in the gold zone, make it really color coded easy. But let's say I wanted to take a short-term shot at maybe copper and Freeport-McMoRan leveling off. I would need green or yellow candles on my 1 hour time frame. Now, these green or yellow candles are the top tier pro candles. They're aligning with a lot of the logic that I use for the grab candles for many, many decades, but we've upgraded them to reflect a little bit more participation. So they will change colors in a different way than the grab, but a similar philosophy as far as looking at a candle and being able to get an instant read about bullishness, bearishness, or being neutral. All right, so if there is a potential buy, maybe it's going to be on the 1 hour on Freeport, and I'd really like to see copper in line with that. I'd like to see that maybe there's a copper buy aligning with the Freeport-McMoRan buy. Now, NEM is an interesting name, Patrick. So now we're looking at gold miners and metal and mining. NEM has weighting in both, but I would say it's predominantly going to move with gold and GDX. It's the number one weighted stock in GDX, but it is weighted in the metals and mining. And you'll see a little bit of overlap between metals and mining, which I would largely consider copper's playground, and gold miners, which, obviously is gold's playground. But I would be a little bit more bullish on gold because I don't have the steady red. I'd be a little bit more bullish on NEM. But here's what I will say. Miners, gold miners and metals and mining had a great Q1. They had a great April, May. But really, as we started seeing some of the sector behavior over the last month, right? Do you see where if we went back 3 months, and looked at where GDX is sitting because of the strength it had, and even metals and mining, the last month has been really tough on metals and mining. In fact, if you look at the last 30 days, look at the bottom, metals and mining and GDX. If you look at month to date, metals and mining is way down there based on that heaviness in copper, and GDX is not far better. So I loved these to the long side in Q1 and in the beginning part of Q2. But really, we've seen a tremendous shift in that clarity, most especially in copper. And then you can see how that filtered down through the stocks that are going to be tethered to that narrative. So how will the futures affect Thursday on FCX? It depends on whether, so I would say this. So the second part of your question there, if I'm looking at copper, which has a 1 hour trend, if we can continue that, that should be bullish for Freeport-McMoRan. Okay. All right. Next up, Natty Gas and UNG. Yeah, they sure are, aren't they, Ren? And that's been benefiting the XOP to a certain degree, but NG, UNG, absolutely back and buy the dip mode. If now you mentioned it for a 2-week trade, so that's going to map to the daily, right? If I'm looking for something for just a handful of days, 1 to 3, maybe 5 days, that's the 1 hour's job. But for something that could be days to weeks, that's going to be the trend on the Natty. And I would buy a pullback to the daily price movement range or the mean reversion on Natty. Now, I won't look at UNG for the setup. I'll keep an eye on natural gas futures. When natural gas futures triggers in the daily price movement range, when natural gas futures maybe triggers in the mean reversion, what I can do is choose your own adventure. I can choose to trade futures. I like to trade them, but I can also choose to buy calls in UNG when the natty gas futures are triggering a buy of their own. So that's the way that I would look at that one, Ren. All right, awesome. Okay, next up is, with my experience, what do you think will happen on Friday? Options expiration pertaining to NVIDIA. So don't make OpX much more than a singular, and not that you are, Daniel, but don't make OpX anything more than a very singular and finite event. It's going to affect Friday, maybe some of Thursday, and then by Monday, it's a distant memory. So the way we want to think about NVIDIA is what's happening with semiconductors, strongest sector. What's happening with NVIDIA, strong stock, number one weighted stock in that strongest sector. So if there is any movement in NVIDIA, well, let's ask ourselves about this whole Max Pain thing. All right, so when I look at the option chain here, and I'm taking a look at what we're dealing with here in NVIDIA. All right, this is the June 21 option chain. And you can see there's a ton of size, but it doesn't take much to say that there's more size on the call side. So that's where I'll focus on the Max Pain. All right. Now, I don't do a Max Pain calculation because I actually don't think it tells us the real story. I do this kind of work. So if you're looking at where there are walls of activity, walls of resistance, walls of support, look at the open interest. Just open up the option chain. So the next part of it is, if Max Pain is designed to try and render the largest number of options, and I'm going to focus on the call side, worthless, that's going to be impossible. There's tons of liquidity across it. So you can see how futile trying to specify where Max Pain mathematically would be. It's not necessarily going to be accurate. Look at where we're trading. I would look more so where we're trading on Thursday and where we are on Friday. So let's say we're trading around 135.58 as we wind down Thursday and go into Friday. Staying below 135 renders 135, including this giant 140 open interest, 121,000 open interest, would render all of these pretty much worthless, right? So you would imagine that a large amount of options writers, those folks who sell premium, would really favor this particular stock closing just below 135, right? Do I see it going down below 130? Again, it's not a matter of where could Max Pain be. It's a matter of proximity on Friday to where the zone has been, where there's support and resistance. And then, is it going to behoove traders to really try to render this 134 worthless, or would they try to go for 133 or 132? Right. So that's what I try to determine. Where is the proximity? And again, the thought being, where would price have to close to render the largest group of options worthless? And so I would say around 135. Right. So what does that mean to the NVIDIA stock? It actually doesn't mean anything, because 135 is a brand new, it's a high for the month. It's probably the high for the last couple of months. You can see here. And so 135 is not a huge deal. It's gonna be likely, if I were trying to take advantage of likely a Max Pain type scenario, I would look for some weakness, which is exactly what we want, because that would allow us to buy a dip. And that's what I would be looking for. But I'm actually not that avidly looking for a dip on NVIDIA as much as I am let NVIDIA's weakness then pull SMH lower, and then maybe we get some action on SMH. And we could do the same thing on SMH, right? Kind of take a look at where prices would close to render. It's a lot easier to see on SMH. Where would price and SMH have to close to render the largest amount of options worthless, right? Okay. So next question is, what do I think about a double bottom in McDonald's? Let's see, double bottom. Looking at the daily, I'm just going to presume the daily since there's no time frame mentioned. I would not on daily want to do that. Maybe on a weekly, start to build a longer term position portfolio. But this is still a downtrend. But to your point, If there's going to be support, that Darvis that was automatically drawn at 249 would be a level to keep an eye on. All right. CL, I'll tell you this. You ask a really important question. It's a little too soon for sector rotation for me. I'll definitely focus on that closer to the end of the month. But at the end of the month, if there is going to be rotation, and what is rotation, gang? It's profit taking and it's bargain hunting. So if we would just call rotation what it is, we're never going to know if it's going to happen, but we know how it could look, right? Now, the other side of sector rotations is participation. What if nothing has to see profit taking and a little bit of a pullback, and instead money comes off the sidelines and just all the sectors or most of these sectors are bought, rather than, say, for example, profit taking in semiconductors and in tech finding its way down into metals and mining, oil services, oil and gas explorers, and energy. If there's going to be some pronounced rotation, I would look at it to be out of tech, out of semiconductors, and into energy and possibly metals and mining. That's where the top of the Ferris wheel, if you will, that's on its way down, and the bottom of the Ferris wheel is on its way up. So think about it again. Instead of sector rotation, think profit taking and bargain hunting. Take profit in two very strong sectors, take those profits and start to bargain hunt at the bottom of the list. That's a lot of times how sector rotation works. Now, obviously, profit taking in SMH and XLK could land in financials or basic materials or home builders or agribusiness. It doesn't have to be the bottom of the list, but that would be the most extreme example. That would be the most extreme example of profit taking to bargain hunting. Okay. All right. Great question. I think that's a great one to wrap up on. So as always, gang, thanks for being here for Charts and Coffee. We'll be back tomorrow for our 20-minute show from 9 to 9:20. In the meanwhile, I'm going to do a few more scans. I mentioned that I'm looking at some energy bounces to short the rip. I'll continue to look for buy the dip, at least too close to the end of the month in those strong sectors. A lot of our watch list is very much predicated on the strength that we're seeing in the NASDAQ sectors. Check out the premium video or even the free video over at the Simpler Trading YouTube channel for the way that I'm looking at least the rest of this week. All right, gang, be good to each other, and I'll see you tomorrow.